Ramkrishna Forgings Limited Q2FY22 and half-yearly investor conference call hosted by ICICI Securities Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rushad Kapadia from ICICI Securities Limited. Thank you, and over to you, sir.
Thank you. Good evening, ladies and gentlemen, and welcome to the Q2 and H1 FY22 results conference call of Ramkrishna Forgings Limited. We have with us from the management, Mr. Naresh Jalan, Managing Director, Mr. Chaitanya Jalan, Whole-Time Director, Mr. Lalit Khaitan, Executive Director and Chief Financial Officer, and Mr. Rajesh Mundra, Company Secretary. So without further delay, I would now like to hand over the floor to Mr. Lalit Khaitan for his opening comments. Thank you, and over to you, sir.
Thank you, Rushad. Good evening and a very warm welcome to everyone present on the call. Along with me, I have Mr. Naresh Jalan, our Managing Director, Mr. Rajesh Mundra, Company Secretary, and SG, our Investor Relations Advisors. Hope you all have received our investor presentation by now. For those who have not, you can view them on stock exchanges and the company website. We trust and pray that you and your families are safe, healthy and secure. We hope you all are following best safety protocols and ensuring safety against COVID-19 pandemic. We at Ramkrishna Forging to ensure safety of all employees during the pandemic have followed strict safety culture and COVID-19 protocols. We have conducted all the necessary vaccination drives in all its facilities and ensured that its entire workforce was vaccinated. We also organized several vaccination drives for public at large. With recent signing of MOU for the development of EV powertrain components with US-based technology partner, which follows our first order in EV segment from foreign multinational Tier 1 OEM in India, we are well placed to capitalize on the fast-growing EV market in Indian market. This breakthrough in EV market is also testimony of our strong R&D as well as product offering in terms of complexities and designs. The PLI scheme, which focuses on the EVs and hydrogen fuel cell vehicle manufacturing, will act as a strong catalyst and catapult the domestic industry into next growth orbit. The domestic auto industry is still on its way to recovery after the second wave. The silver lining is the commercial vehicle segment, which has performed relatively better, and this augurs well for us. In the European markets, commercial vehicle registration for the period January to August showed high growth this year for the sector as the economy emerges from the pandemic hit. Nearly 1.3 million new commercial vehicles were registered in European Union during the 8-month period, making growth of 24% compared with the same period of 2020. Demand is driven by Central Europe, where sales continue to remain strong. US new light vehicle sales in January to September reached 11.75 million units. Sales for 9 months of the year are up by 13% compared to same period in 2020. We have added customers in Europe and North America and started supplying to South America, and we expect to add more customers going forward and expect improved contribution from exports. During the quarter, we managed to receive contracts worth rupees 620 crores from 8 contracts from various geography and business verticals. As mentioned earlier, we have also signed MOU for the development of EV powertrain components with US-based technical partners. With the help of this contract, we have expanded our product offering in EV market. During second quarter, we commenced commercial production at 2,000 ton warm forging press line, as well as our fabrication facility. With this, our capacity has been increased to 1,87,100 metric ton, and this also marks end to our current capex cycle. As part of our growth strategy, we continuously work on de-risking our product portfolio by diversifying across different segments, customers, and geographies. During the quarter, we added customers across various segments and geographies, and we are confident to get repeat orders from the customers and foresee a strong performance in upcoming quarters. That's it from my side. Thank you.
So should we start the floor for Q&A?
Yes.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and one at this time. The first question is from the line of Raghunandan from Emkay Global. Please go ahead.
Thank you, sir, for the opportunity. Congratulations on stellar numbers. My first question was on the order contracts of 6.2 billion. Congratulations on winning these orders, which gives visibility for outperformance of the company versus the industry. Sir, here just wanted to understand, of these orders, how much would be new orders, how much would be replacement orders? And this quantum of 6.2 billion, would it represent a single year order or would it represent the lifetime order? And lastly, another clarification, would most of all of these orders commence by FY23? I would understand that some of it would start in FY22, but would it be fair to assume that everything would have started off by 23?
Raghunandan, first to answer your questions one by one, these are all new orders. They are not any replacement orders. Number two, these are all orders which go into production in terms of samplings this year, and bulk production is in different quarters of FY23, and the entire full year production is going to be from FY24 onwards.
Thank you, sir. That was very helpful. And sir, the new orders seem to be flowing in, and thank you for the timely updates on the exchanges on the new orders. And here, Naresh sir, if I can, take your opinion, where are you seeing the traction in terms of the geography and within industrial, which are the segments from where you are seeing the traction for new orders?
New orders in terms of auto sector is coming mostly from Europe, and in oil and gas is coming both from US as well as Dubai, to be a country specific.
Got it, sir. And so, on the industrial side, on a quarter-on-quarter basis, there has been a very strong improvement. Q1 was closer to 45 crore, whereas Q2 has come in at closer to 108 crores. So this QOQ improvement has been led by which segments? And just wanted to understand, you expect the momentum to continue going forward as well?
In industrial segments, we are majorly now sales are being contributed from tractor and earth moving equipments in domestic and exports both. And we expect this to more expand in coming quarters. And new order wins, you will see new order wins also in coming quarters, making it more clear that how we are de-risking our entire model going forward.
Wonderful, sir. Sir, on the congratulations on the EV powertrain components where you have made progress. Can you elaborate on what are the products we are focusing upon and what is the size of opportunity? And also if you can talk a bit about the initial EV order which you have got, please.
Our initial EV order is basically in terms of manufacturing parts for motors and controllers. And our joint venture also, our first thrust is into manufacturing motors and controllers for two-wheelers, three-wheelers and four-wheelers. Right now, I would not comment on the size of the business. We would still wait for another quarter before we have entire clarity because we are in process of, right now we have only signed a definitive agreement, but we are in process of finalizing a joint venture agreement. So we would wait for once the joint venture is concluded before we put anything to light in this.
Thank you. This is the operator. Mr. Raghunandan, may we request that you return to the question queue for follow-up questions? Thank you. The next question is from the line of Abhishek Jain from Dolat Capital. Please go ahead.
Thanks for the opportunity and congratulations for a strong set of numbers. Sir, during this quarter, there's a big difference in standalone and console performance. Although on revenue basis, there's hardly any differences, but EBITDA and PAT is lower by 8 and 6 crores. Where all these losses incurred? Please throw some light on it.
Abhishek, this is basically a mix of the loss incurred by our travel subsidiary. That's around 1.5 to 2 crore is on account of that. Another 5.5 crore is on account of Ind AS accounting adjustments done on the sales to the US subsidiary.
So will it be continue in the coming quarter?
No, so the process will continue. It depends upon the sale, how much the sale goes in the quarter, and certainly there will be some adjustment every quarter on account of this.
Okay, so on console basis, that EBITDA margin would be around 21-22%.
But it may improve. It may improve in the upcoming quarters if we have received more sales there in the US subsidiary. So subsequent adjustment is not going to be this kind of this. I will say this quarter the gap is, I will say, one-off.
Okay, fine. The company was also looking to buy assets of the ACI, Amtech Auto. What is the progress right now?
It is still pending with the NCLT, and we are awaiting the next date of hearing on 26th of October.
Okay. And sir, can you throw some light? What is the capacity there and how much revenue it may add if you want this business?
I will say that is a machining of crankshaft basically, and so that's in terms of 3-wheeler, 4-wheeler crankshaft, 2-wheeler crankshaft. They make hubs on board, so all the materials. We have also always given the guidance that there is a revenue potential of 500 to 800 crore from that unit at an optimum capacity utilization.
Okay, fine. Sir, the company is also looking to raise fund of around 500 crores. So just wanted to understand what is the objective for it and how much equity dilution will be possible in the coming quarter.
I would say we have not yet decided on that. So still that needs to be decided how much fund is to be raised and when. So we will inform you as and when we will decide on that.
So your debt is increasing continuously. There is some pressure on the working capital side as well. So what is your effort to generate FCF and start to repayment debt? Because this quarter also we have seen that debt has gone up to the net debt has gone up to the 13.2 billion versus 11.3 billion of last.
Yeah, because the net debt has gone up by about 140 crore if you look at the 6-month performance, but you can see the pressure on the working capital. Current asset has gone up by about 300 crore against that. So that's due to the increase in exports, basically more increase in exports and a little bit increase in the VMI stock. So that has created, and that the kind of growth trajectory we are in, there will be some pressure on the working capital for the time being. But once we reach the optimum level, then it will start moderating, and certainly we will start generate free cash flow.
Okay, sir, thanks. And my last question is related with the gross profit per ton, which used to be the 65,000 to 70,000. That has gone up to the 110,000 per ton in last couple of quarters. What are the key reasons of this sort of the expansion in gross margin despite the higher RM cost?
Basically, Vishek, I think it's a premix of job and better value addition on the jobs which we are trying to do as we move forward.
So is it because of the better mix or because of the BS6 content, increase in the content per vehicle because of the BS6 and other things? And
no,
also
it is not basically BS6. It is basically we are slowly but steadily graduating from only forging supplier to fully finished product, and now fully finished product are getting converted into assemblies. So as we ride up the value chain, our RM cost to sales are getting affected, and by which gross margins are going up.
Okay. And so what is the current capacity of machining, and how much change in the milling in last couple of quarters?
Almost, I think in last 6 months, we have moved from 45 to 50% to almost 75% plus in terms of machining and assemblies.
Thank you. Mr. Abhishek Jain, may we request that you return to the question queue for follow-up questions. Thank you. The next question is from the line of Mitul Shah from Reliance Securities. Please go ahead.
Thank you for giving me this opportunity, sir, and congratulations on a very strong performance. Sir, I have first question on your average selling price per kg, which shows roughly 7% improvement on a sequential basis, quarter on quarter. So I would like to know how much is a price hike purely and how much would be whether product mix or value addition.
Mitul, I think it is extremely difficult for us to say how much is for raw material price increase and how much is for product mix change. It is extremely difficult.
Sir, I'm asking how much price hike we have taken in this quarter.
We have taken 5 rupees 90 paisa price hike for steel, which has happened in this quarter.
Okay. And then, sir, on the second question on the RM side, RM by sales is since last 2-3 quarters is a huge fluctuation. Like for example, Q4 was 51%, then it fell down to 39 in previous quarter, that is Q1FY22, and now it has again come to 45%. So what should be the stable range one should consider?
Mitul, I think it is extremely difficult right now to predict that with the raw material prices changing every quarter. It is very difficult to say, because how much inventory we are left with or how much inventory we go into next quarter with. It is and when the price increase, actually basic things which are difficult to predict is the retrospective effect of the raw material price increases which are happening. Because of that, we are unable to predict how things are moving.
A little bit to add, Midul, what happens when you see the last quarter number or the current number, you deduct the decrease component in the cost of goods consumed, there are a lot of costs other than the raw material also involved in that is reduced for the purpose of presentation from the raw material, like processing costs, other manufacturing costs. So that's why you find that anomaly. But the 46 to 50% is always a benchmark number to consider this.
Yeah, so at least on a near term, whatever visibility we have, that 46 to 50% would be a probable range.
Yes.
And sir, my question on the again export and LCV side, can you give more detail on what is the now situation of LCV segment in terms of utilization, margin improvement, and new orders?
I think gradually we are winning new orders. I think we have been keeping our investors posted with whatever new orders we are winning. In terms of LCV, we are doing exceptionally well in the North American market, and we feel that in coming years, lot of new orders are going to come in, which is going to make a significant progress in LCV side.
So for the quarter, LCV would be how much as an overall percentage of revenue?
In terms of export overall revenue, I think there are two parts to it. Lot of material is right now sitting in LLC in terms of North American sales in LCV, and in the sales which we have already taken into accounts, I think close to 5% is LCV sales. But lot of material is in warehouse and in LLC.
Okay, so out of this revenue, it would be roughly 5% at present.
Yes.
And on the export side, sir?
In export side,
overall export view outlook in terms of.
I think we are going to remain strong. What we feel only in our presentation we have clearly highlighted. We cannot predict the semiconductor issue, what is going to plan out for it. But putting a semiconductor issue aside, I think we should continuously do well during the entire quarter.
Because earlier we were expecting roughly 900 crore kind of annual revenue. Now it seems with this run rate, it could be definitely much higher than that. So what could be?
We would not like to give any forward-looking numbers, But only thing what we can say that we are going to remain or working in a consolidated manner, and we should look at doing much better than what we are doing right now.
Okay, sir. Last question on the margin side. This 24% EBITDA margin historically high. So any view? Of course, I'm not talking about next 1 or 2 quarter based on the fluctuation of raw material as well as uncertainty on semiconductor side. But sustainability-wise, 24%, is it sustainable, or it could be one-off and stable margin would be 21, 22?
No, we are looking at sustainable margins at this level, and I think whatever the work we have done post-COVID is resulting in this kind of margins for us. And I think we would like to, in last quarter we had attained 23 plus percentage of margin. That is a sacrosanct number for us, and I think we are doing all what is required to improve on those numbers. So we are not surprised with what number 24 plus numbers what has come. We are working on improving the margins from what we had done in first quarter.
Thank you, Mr. Shah. May we request that you return to the question queue for follow-up questions. Thank you. The next question is from the line of Yash Sharda from Daiwa Capital. Please go ahead.
Hi, thank you for the opportunity. My questions have been answered. Thank you once again.
Thank you. The next question is from the line of Dhiman Shah from One Up Finance. Please go ahead.
Yeah, thanks for the opportunity. One clarification on the Amtech. You said the capacity is related to machining. So if you can help me just kind of rewind that number that you mentioned, which it can add in terms of incremental sales on a full year basis.
Yeah, the way I said, on optimum capacity utilization, we can go from 500 crore to 800 crore.
Okay. You mentioned a very interesting thing, and it is partly reflected in your, improving gross margins, and of course the overall EBITDA margins that you are guiding for. So as we move from smaller products to finished products to assemblies, where do you think, given the current capacity, will plus give or take whatever, will this mix reside? Will it be, very crucially in favor of the assemblies, or as we embark on this journey of, more and more value addition as we move forward?
I think with our capex cycle almost over,
right.
Now it is time for us to fix our utilization and improve capacity versus what we had in terms of whatever better utilization we can do from the capacity. So I think going forward you will find more and more improvement in terms of machining, assemblies, and this is the thing which we have to continuously do for next 4 quarters, at least a year, before we look at further adding in capacity. With the market growing, what we have said in our opening, Lalit also said, we are seeing green shoots in Indian economy and Indian auto sector now reviving. So we are looking at doing such things to improve our utilization in terms of machining and assemblies to ensure that we are at the upward trajectory of the capacity.
Right. So can you give us just some broad range that, machined and assemblies put together would be at least upwards of 60-70% of the total turnover?
No, I think we are looking at going up to 85 to 90% of our forgings in machined condition or assembled condition in next 2 quarters itself.
Oh wow. Okay. And given the kind of growth and geographical expansion that you are seeing, would it be 1 year before you will need to consider, the next leg of capacity expansion, if any?
I think nothing before FY24.
Okay. So that means that we would possibly overall the complete, as you rightly pointed out, towards the higher value added products before which we.
Yes, once we are at the optimum of our current capacities, and
right.
We are debt light. That
Correct.
is the time when we start getting free cash flows and we are able to repay most of our debts. then we are looking at to go ahead with doing any expansion or capacity addition.
But the lead time would be, sir, at least even if you plan, let's say in FY23, by the time you order and it comes, it will always, it will be beyond the FY24. So how early do you need to plan for the next leg of expansion?
I think it is extremely difficult at this stage to give.
No, normally what is the lead time in your?
It depends on the market condition. If the market is hot as it is today, it will take 12 to 16 months. But if market lightens from here, it may happen in 6 months itself. It all depends on the market condition at that time when we start looking at capacity expansion.
Perfect. And lastly, if you can comment on the working capital cycle, will it improve for us? The thing observed in the quarter, was it one-off, or can this working capital kind of improve? Was it that only because of sampling, because of certain export order?
I think if we continue to grow at the pace we are doing from first quarter of 400 plus crores to almost 580 crores, if that kind of expansion happens, and mostly from exports, I think it will take some time before the working capital cycle eases out, because shipment starts reaching and then we get paid. It is a full 3-month cycle when things start looking at. So we should be from fourth quarter onwards start looking at things to normalize and debt coming down in the lower side.
Super. Thank you. And one last question, sir, if I may. How do you think, on an overall basis, both domestic and exports, is the pass-through of the raw material happening for us?
I think it is 100% pass on, except the government contracts on the domestic side. All raw material is 100% pass on for us.
Okay. Great. Thank you so much, and all the very best, sir. Thank you.
Thank you. Participants, to ask a question, you may press star and 1. The next question is from the line of Dhiral Shah from Phillip Capital. Please go ahead.
Yeah, good evening, sir, and thanks for the opportunity. So my question is pertaining to the passenger vehicle side. So any progress over there as we're looking to inroad into that segment?
Yes, we have started making progress in the domestic side in PV.
Okay. So is it contributing right now, or this will going to contribute from next year?
They will going to contribute next year only.
Okay. And sir, on the railway side, how much it has contributed to the non-auto side?
I think Lalit can give you the exact number of railway in first half.
Railway has not done very well in the first half altogether, and I will say we have done a very nominal sales so far. But we are looking now. The orders are getting the railway started buying, and market railway segment is also looking up. And in the next upcoming half, we are looking for much better number on the railway.
Okay. And so lastly, on the EV side, are we looking for any new capex in the EV segment, or it will be entirely catered to the existing capacity which we have?
No, in case we put up a full assembly plant for motors and controllers, which we are talking to our joint venture partners, we will require a capex, but that may be an extremely small capex of $5 to $6 million only.
Okay, so this 620 crore worth which you are talking about, it will be from FY24, right? And this will be for how many years of orders, sir?
It is for 5 years.
Okay, so distributed equally, right? Evenly.
Yes.
Okay. Thank you so much, sir. That's it from my side.
Thank you. The next question is from the line of Viral Shah from Enam Holdings. Please go ahead.
Yeah, hello. Thank you for the opportunity. So firstly, just a clarification. What would be our net debt number at the end of the quarter?
This number right now we have reached 1,210 crore right now.
Okay, so has it come up from September quarter, or this was the number at the end of September quarter?
The number at the end of September quarter, I think.
Okay. No, because in the balance sheet it is showing around 6.
I will specify the balance sheet. What we have there is a bit counting of Tata Motor, that is notional. We have to add in debtor as well as in borrowing. That is 113 crore. Apart from that, 26 crore cash balance we have reduced from arriving at this net debt balance.
Okay, got it. Okay. Secondly, sir, on capex, if I get the number right, in H1 the capex outflow was 150 crores. So what should we consider for the full year?
This is the operator. Sorry to interrupt. Mr. Viral Shah, please self-mute your line, sir, while your question is being answered.
Sure.
Mr. Viral Shah, please self-mute your line, sir.
Hello.
Yes,
Hello.
please go ahead.
Lalit, can you answer the question?
Yeah, Viral, are you there?
Sir.
Yeah, okay. So on the capex, I think we have already completed major part of our capex, and there are some small capex are pending. I think another 25 to 30 crore will come in the rest part of the year on the capex side.
So it is fair to assume that our capex outflow for FY22 would be below 200 crores.
Yes.
One more question, sir, on the inventory, sir. We've seen a fairly large rise on the inventory side. If you could clarify what was the reason why we've seen such a hike in inventories?
Yeah, basically, it has been on account of increase in stock at warehouses due to at Europe and US. The vendor managed inventory has gone up, and SFG has also gone up because we were building up inventory for the improvement in domestic market, which we are doing, and that has not happened so far. So that's why a little bit built up on inventory.
Okay, just one last question, sir, on the steel price. For the export contracts, are steel prices related to the domestic market or international market, and how do you pass through?
No, it is related to international market, and basically we rely on contractual indexes. We have different indexes in different contracts. And based on the increase and decrease on those indexes, the steel price is passed on every quarter.
Any further pass-through which is remaining, sir, or we've largely kind of covered for all the steel price increase?
To 30th September, we have got all the increases.
Okay. Thank you so much for answering all the questions.
Thank you. The next question is from the line of VP Rajesh from Banyan Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity and congratulations on a good set of numbers. My first question is on the new order wins that you mentioned early on. Are we winning against other competitors, or are we getting incorporated in the new models of these customers' vehicles?
I think, Rajesh, we will not be able to answer to this question because we don't know whether we are replacing any other supplier or whether it is for new models. We don't know. We don't ask all these questions to when RFQ comes to us, we basically deal with the RFQ and basically close those RFQs with our customers. We don't ask them questions related to who are the current suppliers or whether it is a new component.
Okay. And then the other question, you said you are looking to reduce your debt. So is there a target to which you will bring it down to, and by when?
Could not got you. Can you repeat your question?
Yeah, you mentioned that you are looking to reduce your debt by Q4 as the working capital cycle eases.
So working capital was, yeah, there is a pressure on working capital, and once it is working capital level starts to improve, the debt will automatically go down.
Right. So any targets that you want to share with us for next year in terms of what it will be?
We have earlier given the target that our debt level will remain at a certain level. I think at 1,070 crore. I think that number we should achieve.
Okay. Thank you. That's all I have for now. Appreciate it.
Thank you. Reminder to the participants, anyone who wishes to ask a question may press star and one at this time. The next question is from the line of Abhishek Jain from Dolat Capital. Please go ahead.
Sir, there is a forex loss of rupees 11 crore in first half FY22. Is it because of the foreign dominated debt? And second, do you count it on other expenditure or interest cost?
No, we have a forex gain, Abhishek, in the first half. We don't have a forex loss.
Okay. Okay. And so, do you have any hedging policies for this sort of?
We forward sell our exports. We do our part of our export forward sale. That we do, but we do not do 100% of the exports hedging. We do around 60% depending upon the circumstances. We do hedge.
Okay. Sir, during this quarter, we have not seen any revenue performance from the subsidy side. Only we have incurred losses. So can you throw some light on the business and operational performance of these subsidiaries?
We have the revenue, but due to Ind AS adjustment on the US subsidiary, that revenue has been set off. That's why you are seeing a loss in this quarter, not revenue. But from the next quarter, you can see both on the top line, on the bottom line, the reflect of the same. Certainly, we have only one subsidiary in the travel segment where we are a little bit adding business or diversifying some business in that segment only. And we have a foreign subsidiary where we are selling goods produced by Ramkrishna Forgings Limited to our customers.
Okay, sir. My last question is related with this export side. You want to revisit your guidance for the 50% growth in export for FY22?
No, we would not like to revisit right now.
So, what sort of the growth can we assume for the second half? Because the growth was quite strong in the first half.
So I think we would continue with that growth. Only the statement we would like to attach with it that this is just the beginning of the journey.
Okay. Thank you, sir. Thank you so much.
Thank you. The next question is from the line of Arjun Khanna from Kotak. Please go ahead.
Thank you, sir, for this opportunity. Just a question in terms of working capital. If I look at numbers, you have actually given the production numbers also. So, is my understanding right? So, we had roughly 28,729 tons of sales, and our production was 36,863. So, essentially, we built roughly 8,100 tons of inventory. Is that the correct understanding?
No. That's the forged production, and that's the sale quantity. That's a mix of mixed machined and forged. So there is some gap between the stock and the production here.
Okay, so in basically machining some parts, obviously the weight comes off because we right size it. That's the correct understanding?
That's the correct understanding. Yeah, correct.
Okay, sure. No, this is helpful. And if we look at inventories by itself, would you characterize it as unnaturally large, maybe because of what we have seen with container issues, etc.? Or you think this is largely a normalized inventory?
No, I think this is largely because of delays in right now shipments. And,
right.
Material getting accumulated in the warehouse also. Because of semiconductor issue, material has not been pulled to the extent we thought it would be pulled by the customers from the warehouse in RKFL LLC and our European operations. So that's the reason you are seeing this kind of inventory.
Sure. No, that's helpful. Thank you.
Thank you. The next question is from the line of Jinesh Gandhi from Motilal Oswal Financial Services. Please go ahead.
Hi, sir. Congrats on good set of on numbers. My question pertains to the capacity of 1,87,000 tons. So what kind of revenues we can do from that capacity considering the mix change which we are trying to attain?
I think it is extremely difficult for us to right now tell you what is the kind of revenue we can attain. What we are talking about is right now is we are looking at almost 80% to 85% utilization in the installed capacity by FY23, and to get a top line to it is extremely difficult right now because the way dynamics are changing for us on day to day basis. We cannot predict what is the revenue number going to be with that.
Okay. And this order book which you talked about, 620 crores. So effectively annualized run rate is about close to 130 odd crores from this. That's the correct understanding, right?
No, 608 is annualized and it is a 5-year contract.
Okay. Understood. Great, sir. Thanks and all the best.
Thank you. Participants, to ask a question, you may press star and 1. The next question is from the line of Mitul Shah from Reliance Securities. Please go ahead.
Sir, thank you for giving me opportunity once again. Sir, I have a question on non-auto side. Apart from railway, what is the status in terms of other segments where we were trying to enter and expanding?
So, Mitul, I think we have already started expanding in tractors, in earth moving, and this is already started showing in our balance sheet also. And I think our entire endeavor and thrust is that in next couple of quarters, non-auto segment, which is oil and gas, tractor, and as well as the earth moving, construction equipment and other things, becomes equally big as the auto sector for us.
For this quarter, sir, how much contribution was from this?
I think Lalit will be able to tell you the exact number, precise what is the industrial segment number.
Do you want number right now?
Yes, sir. Because, sir, in our presentation, other segment we have shown as almost like 19%. So, how much, or can you give some breakup there?
See, that's the number we have actually derived from the sales customer wise. So 90% fairly on the non-auto side. What we are looking at, it contains certainly oil and gas, railway, and the earth moving equipment basically. And so if you look at broader number, certainly it will be somewhere because the domestic side, even this contains scrap also. So this is a mix of kind of thing. So number certainly from this 18-19% is coming to around 100 crore. You got the number, I think, that way from the presentation.
Around 45 crores, if I may put an approximate number, it is for around 45 crores from this non-auto segment of railways, tractors and construction.
Okay, yeah, that is very helpful, sir. And sir, second is on the margin side. So new order wins are generally slightly high margin segments, right? And most of them are again from the overseas, which is again higher margin territory for us.
I think it is very difficult for me to comment on new order wins, margins from new order wins. I think once we take up manufacturing for those components, then we will be able to understand what margins. Right now, it is basically a calculated margins, and as I said in my earlier statement, 23% is sacrosanct for us in terms of attaining at an EBITDA, working at an EBITDA level. I think we are trying to improve more than that, and this our effort for continuous improvement is already showing in our current results, and it will continuously show in the coming quarter results.
Sir, lastly, just to reconfirm on the capex side, for FY23, we are saying our majority of the capex is done, so only maintenance related capex. So it should be roughly like 40-50 crore kind of annual rate should be the range, right?
Yes.
Thank you, sir.
Thank you. The next question is from the line of Utkarsh Somaiya, individual investor. Please go ahead.
Hi, thank you for the opportunity. Can you please tell me the replacement cost of your current capacity of 1,87,100 tons?
I am unable to understand exactly what do you mean by that.
Basically, how much does it cost you to put up 1 ton of capacity?
We don't have any such figure of 1 ton of capacity. How much does it take to put up? But in case anybody wants to replicate what RKFL is right now, he will need at least 2,500 to 3,000 crores in his pocket to replace RKFL as a whole, in terms of only assets.
That's good. And another question. So assuming that your product mix is only going to improve from here, and if I take the current quarter as just a base, can I assume you can do 3,500 to 4,000 crores of revenue?
I would not like to comment on what revenue we can achieve. What we are talking about is close to around 85 to 90% utilization in FY23 of our installed capacity of 1,87,000 tons. And as the commodity prices moves up and down, or the premix changes, because the market is so dynamic, we would not like to comment on what, in terms of rupee or monetary terms, what the revenue can be.
But is it fair to assume that your product mix will only improve from here?
Yes, it's fair to assume that the product mix is going to further improve from here on.
Okay. And the 500 to 800 crores of revenue from Amtech Auto, when do you think that would come into the consolidated number? Assuming
when the court handovers that plant to us, we are eagerly waiting for the Indian courts to decide, and the day they hand over it in 12 months time, post 12 months time from the handover, I think this revenue is going to get consolidated into the balance sheet.
Okay. Thank you so much.
Thank you. The next question is from the line of Karthikeyan from Suyash Advisors. Please go ahead.
Yeah, hi. Good afternoon. Can you talk a bit about your next set of growth plans in terms of what, something about the color of, new initiatives that you would be looking at? Would it be more of the same? Or can you talk a bit about your mindset? Share some of your thoughts, please.
No, I think, Suresh, it is premature to talk about anything what is going to happen tomorrow. Right now, whatever we have done, we would like to consolidate on that. Like I said in my earlier statement, that we are looking at to become in FY23 to be a debt-light company, and once that is done, we would like to grow from there on. And in terms of what we would like to do, I think our growth path is very clear. I think we are looking at adding in terms of value add and in terms of assemblies. And that is our endeavor, that now we would like to be on the upper side of the value adds.
And would that mean it will be less capital intensive going ahead? Or
in terms of return ratio to sales to investment, yes, obviously it is going to be on the lower side. But I think it is very, very premature right now to comment on what kind of investment or what we are going to do post FY23. But I think our plates are full till FY23, and I would like to comment only on when the D-Day comes.
Right. Just to clarify, I didn't hear very clearly. Did you mention that the annualized run rate of new orders, one is 620 crores, or is that cumulative? I'm sorry, I couldn't hear that clearly.
Annualized run rate of 600 crores per year. For some contracts are there for 4 years, or some are 5 years. I don't have the list of contracts in front of me. I think we have announced it pretty clear, and I think we have mentioned details in every announcements to our investors.
Fair. I wasn't very clear about that. So anyway, thank you so much and best wishes.
Thank you. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Utsav Srivastava, individual investor. Please go ahead.
Yeah, hi. I just wanted to know what is the dividend policy that we have in the company. One, because we've got a 50% dividend. What is the rationale?
I think your voice is cracking. We are unable to hear you.
Can you hear me now?
Yes.
I wanted to know what is the dividend policy of the company, because we've got a 50 paisa dividend this. So I just wanted to know the rationale behind this 50 paisa dividend.
So we have uploaded our dividend distribution policy on the website. We can go through that. And this dividend distribution is always decided by the board depending upon the quantum of profit earned or the cash flow available to the company. And considering a lot of other things, a lot of dynamics are involved. So that's already uploaded on the website. You can go through that.
And to correct you, it's not 50 paisa in now we have for the half year it is 1 rupee. 50 paisa we have already given in first quarter, and 50 paisa is the second quarter dividend.
Yeah. Okay. Okay. Questions, I'll come back to it. Thanks.
Thank you. As there are no further questions, I would now like to hand the conference over to the management for closing comments.
Thank you, operator. We have been very thankful for all the persons who have participated in the con call today. We wish you all a very happy Durga Puja going ahead. And if there's any query further, we are there to reply to all the queries and the questions that you have in this regard. Thank you all for attending the call.
Thank you. Ladies and gentlemen, on behalf of ICICI Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.